Hi, welcome to this video, which is all about becoming a proprietary trader or a prop trader. Now, in terms of proprietary trading firms, a lot of traders want to trade with them. Now, the advantages are really good. If you're really serious about Forex trading, you can get an amount of capital allocated to you to trade, which may be more than you have yourself. You can then share in the fee income with the trading company. I know a lot of traders who make a full-time living as prop traders. But yeah, even if you don't make a full-time living, you make a great second income. Now, in terms of this area of trading, I do have a little bit of experience. I used to allocate money to traders when I was at a brokerage. So select out traders who I thought could perform for us and give them money. I'm just going to go through the exact criteria that we used in terms of choosing traders. Now, in terms of if you can meet the criteria, then you can become a prop trader. Now, in terms of proprietary trading firms, there are a lot of what I would call scams out there, not proper prop trading firms at all. But there are a lot of good firms out there, which you can approach. And if you meet the criteria I'm going to go through, you will probably get money to trade with and make a great income from doing so. So what I've done is I've listed out some points on a storyboard in relation to this. So let's go over and take a look at them. Right, let's have a look at how to become a proprietary trader or prop trader. Now, in terms of you want to become a prop trader, do not pay for training to get a funded account. You don't need to at all. Most of the funded accounts you have to pay for training. The deal's just not in your favor. You will not probably make any money. You'll probably lose it. Okay, if you want to become a prop trader, you build your own track record. You present it yourself. If you present it in the right way and it meets certain criteria, you'll gain serious interest from serious prop trading firms and probably end up managing a lot of money. I'll come to the criteria for the track record in a moment. But in terms of, why shouldn't you pay for training? Well, just think of this. Why would a firm teach you to trade? Now, we know the success rate is low in Forex trading anyway. It's even lower for traders who can manage money with the right balance between performance and drawdown, manage big sums of money in the right way. It's a very small percentage. It should be pretty obvious that the firms make money on training. And most of these prop trading firms are just trading companies, really. They're not proper proprietary trading firms. Saw a prop trader who provided training online. He's quite honest, actually. He said, well, it's a great deal for us because we can't lose because we charge for the training. And for the trader, he just might become one of those really good traders or a really good trader. Well, he might, but normally the criteria in place means you're not going to last long with a prop trading company. You're not going to make much money with them. So let's have a look at typical example of a prop training deal. This one was based on a $25,000 account. You pay $750 upfront and ongoing fees each month when you're with the company. Capital risk you could take on the $25,000 is $500. You probably already immediately notice that's less than what you paid for the training. You've got an unrealistic profit target, which basically in terms of this company was you had to make 3% per month, otherwise they could terminate your account. They could terminate your account for any reason whatsoever in their terms and conditions. These companies are not regulated, okay? So everything against the trader, the prop trading firm can't lose. Now, in terms of that example I gave you there are far worse examples, in my view, in terms of it being against the trader. But you can see it is against the trader there, isn't it? If you're paying the company money, he doesn't even get more risk than he's paid, and he's got an unrealistic profit target he's probably not going to make. So no, always best to avoid training companies. They're not proper proprietary trading firms at all, or most of them aren't. I may be wrong. There may be a few who are legitimate, but all the ones I looked at just seemed, no, I just didn't get the right vibe from them, so to speak, in terms of just, in my view, taking advantage of trader naivety. you need to get a track record. If you want to become a prop trader, you need to build a track record, present it yourself. It must be on reasonable capital. When I looked at track records when I was doing it, if someone's started with a few $100 and made money on that, or 1,000, I wasn't really that interested. Because it's easier to make money on small amounts of money than it is on larger amounts of money. I think as a private individual, really 5 to 10,000 to show you're serious. Now, in terms of a track record, what's acceptable? What would get the interest of a prop trading company? If you did 15 to 20% per annum, okay, you compound that in terms of annually over 3 years, you get interest. Okay, certainly if you've got reasonable drawdown against growth, which we'll come to in a moment. I think if you're presenting a track record, 2 to 3 years, okay, 2 years normally the minimum. You might get away with 1 year if it's been a really tough year for traders. Managed money. You can check out obviously hedge fund indexes and so forth to see what trading conditions were generally like. If other traders had a really tough year and you've had a good one, then you might get considered on 1 year. But 2 to 3 years, really, in terms of your track record. In terms of your growth rate, 15, 20%, really good growth rate, okay? But you've got to adhere to a rough 3 to 1 rule peak to valley. What I mean by that is if you make 15% compounded annually, your drawdown should be really a third of that, so 5%. So if you hit a new peak in equity, you go down 5%, you valley at 5% or less, and you come back up to new peak. That's really good. If you keep that 3 to 1 rule in mind, you've got to keep in mind proprietary trading firms want not just performance, they want it steady, okay? So you wouldn't get money from a proprietary trading firm, let's say, if you had, 80% performance and 55% drawdown, okay? I know that's an extreme example. They don't want too much drawdown, okay? Length of drawdown periods, how many months is acceptable? I think in any year, even the top fund managers in the world are going to have flat periods of 3 months or drawdown periods. So you've got 3 month period or less in there per annum, or you've got 2 months, 2 of 2 months, or 1 of 3 months. Obviously this is a little bit more subjective when people look at your track record in terms of your trading style, but nothing wrong with a 3 month drawdown, or like in a year, 2 drawdowns of 2 months. You don't want to be too above 3 months in terms of drawdown period, though, or drawdown periods, okay? Your fees, what can you expect? You might get a management fee, 1 or 2% per annum. Probably get a performance split where you split the performance with the company. How do you find the best companies and how much capital can you expect? Well, you just need to do your research to find proper proprietary trading firms. Get your list, do a little bit of research on the company, and then write a personal letter in with your track record. If you adhere to the criteria I've just put above, you'll probably get interest. How much capital can you expect? I can only say this in terms of 3 traders I know who do prop trading. They were given between 100,000 and 250,000 as a test, okay? The test periods, they varied with 3 traders from 3 months to 9 months, okay? And then they got given bigger amounts of money. They also, 2 of them had to go in to the company, spend a month in the company learning about the company and how they operated and so forth. But they were paid to do that. Those traders, after they got through their evaluation period, today they manage the smallest one, the smallest amount of money is 3 million. The largest is just over 11 million. So they make money doing that full time. And on 50-50 performance split, you got 100,000. Okay, you got 20,000, you got 10,000 per annum. That's not, that's a decent sum of money, but you're not going to live on it, are you? Once you get past $1 million, you get 100,000, maybe a bit of management fee as well, and that's nice capital. But if you can actually, get a track record, not, my criteria there is not set in stone. It's giving you a rough idea what a prop trading firm will be looking for. If you can do that, you end up getting quite a reasonable sum of money. A lot of people might be saying, 15-20%, that doesn't sound much per annum. It's a really good growth rate, especially when you have to adhere to that rough 3-to-1 rule, peak to valley, and you're trying to keep your length of drawdown periods, so they're not too long. Okay, it's not a walk in the park. Let's put it that way. Can you become a prop trader? I think you probably know deep down yourself if you could do what I've said here. A lot of people might be saying, wait 2 or 3 years, before presenting a track record. Sounds a long time. If you're serious about doing this type of trading for a living, that's not a long time at all, is it? So that's just giving you a rough idea of what it takes to become a prop trader. So I hope you enjoyed the video. Thank you very much for watching me. Take care. Have a good day.